because I can capture my Zoom screen and then throw it up and then just see if people get the notification. I've always kind of wondered.
Yeah, do it. Do it. You can also syndicate via Zoom directly to YouTube. I think we can do it live. I have this live on YouTube. Should I hit live on YouTube right now?
Give it a go. See what happens. I've done this on YouTube where we were testing something and I didn't realize that I had like pushed it live to our channel, and all of a sudden, like, we had not tons, but we had a couple people come and hang out, like 3 or 4 people show up, and we're just like testing things out. And then I see in chat people like, oh no, it's looking like this, it's looking like that. We had one guy hang out with us for like 45 minutes and just like test stuff with us. It was pretty cool.
Awesome. It's telling me something about YouTube features, about streaming. Forget it. Permissions on streaming. So there's some.
Got to read the fine print first. Can't accept it yet.
Yeah, I got to read the fine print. Yeah, so it's telling me something about that streaming. You guys carry on, man.
Cool.
But I just want to give some context to people here. I think we accidentally messed up and set up the webinar for 4 p.m. instead of 11 a.m. Eastern, but we had everyone register. And the speakers and whatnot. So, we'll just send the recording to everyone after. We got 2 awesome folks here, Russ and Colin. So Russ, take it away and get it going, get the show going.
Awesome.
Right on.
Yeah. Thanks very much, Lloyd. Awesome. Those who could join us, thank you for joining another Traction webinar brought to you by Boast.ai and Launch Academy. If you guys don't know Boast, we are automating the shred claim process, and we just released a new product. If you haven't heard about it yet, we'll actually do quarterly advances on your claims, so you can get your cash 15 months early. You can reinvest it in your company. You can hire more salespeople. And one of the caveats to that, which was the thing we're going to talk about today, is if you have that product market fit and predictable growth, this is when you definitely want to take advantage of quarterly cash advances, because that cash can allow you to hire more salespeople, grow quicker, get higher valuations, dilute yourself less. Man, go to our website, pull up some of this information. We got a case study that we can share with you there. And I'm excited to jump into this today with Colin Stewart, co-founder, CEO, co-CEO of Predictable Revenue. And we're going to jump into how to build and scale an outbound sales team. Great to see you again, Colin.
Hey, it's good to see you too, man. Thanks for having me on.
Absolutely. Excited to jump into this. I know this is, I think we've done a couple webinars together, and I'm excited to bring it back. And you were talking about how you guys have brought together a new methodology about going to market and scaling a team. And I'm super excited to hear about this. So what have you guys been up to?
Yeah, man. I mean, it's been a hectic couple of years. We went through like a big investment phase where we essentially like turned our services inside out and kind of refactored, rebuilt everything. And so now we're in basically just helping people hire SDRs, and we'll either hire them and sort of rent them out to our customers, or we'll sort of teach people how to do that. So last year was a hectic year, just having such a big staff, and we made it through with everybody intact. So I'm super pumped there. But one of the things that sort of came out of that was this realization that, one, we had to get better. 2, that we had a lot of internal knowledge that we hadn't really done a great job of sharing or pulling it all together. And when I say that, like, we had people that were doing, like, on various parts of our team that had these like little pockets of this really important knowledge. And so my goal was just to pull it all together. The Predictable Revenue, the book, came out 11 years ago. And so, there's some super helpful stuff in there, but sales development has evolved quite a bit since then. And we just wanted to make it sort of new and relevant. And so I want to say that I put the methodology together in terms of like, I copy and pasted stuff into, I will take responsibility or accountability for the table of contents, but the actual content, the ideas, I've stolen from everybody. I mean, there's a heavy basis of obviously Predictable Revenue. So like, learned a ton from Aaron, learned a bunch from our customers, learned a ton from our team. And then obviously 200 episodes into the podcast. So brought all those ideas together, and really the goal was helping companies see how sales development fits together. It's not you can't just buy some meetings and then growth. There's a bunch of different steps. And so we wanted to break it down to help people see just how it all connected together, and to get people focusing on systems thinking as opposed to just, I can buy Outreach or Sales Loft, buy some emails from Zoom, throw them in, and I'm going to get customers. Like, that's not how it works. On the surface, there's we've noticed a very tools-based approach, and I'm as guilty of it as anybody else. And I'm like, hey, I want to solve this problem. What can I buy? And or what tool can I buy or rent or whatever it is? Because that's the sexy and that's the easy approach. And unfortunately, there are no silver bullets. It's a collection of systems and processes and team that will actually get this going. And so what we're talking about today is just our collection of those ideas, how we think the world of sales development fits together.
Man, yeah, that's awesome. I'm excited to jump into some of this. It's I find it also quite fascinating how it's evolved and the different tools that are available today, and it's overwhelming. Mm-hmm. How do you plug them all in? And I think you mentioned a great part there is process. The tools are great, but if you don't have a process to use them properly, then it's not going to lead to success. Mm-hmm. And that's kind of what we've been seeing too.
Totally. I had a mentor, Joel, of mine, and he always talked about people, process, and technology, and like in that order, right? So it starts with great people, then the next step is great process, and then the last step, once you've established you have great people and great process, then you bring in the technology to enable them.
Right. Yeah. So. Exactly. And figuring out when that is. Let's talk about product market fit. Like when are you ready to scale? When are you ready to pull the trigger and start spending? I mean, I've been a part of startups before where we got out ahead of our skis and kind of had a ugly crash at the other end, right? Because maybe you started to scale before you really had your process figured out. So how do you guys see that?
Yeah, I mean, I'm not the person to talk to about product market fit. I'm an entrepreneur that's been there a couple of times, but I wouldn't say I'm like the de facto person. But I love the analogy of getting out on top of your skis. Such a Canadian thing to say. It's exactly how I think about it. And I just want to pause and say hey to our YouTube chat. Let me know if you have any questions. There was a weird thing with how we did the Zoom today, and so I thought, hey, I'm just going to push this up to our YouTube at the last minute. So hey everybody, I'm watching the chat. Let me know if you got questions. In terms of product market fit, I'm not the person to talk to about finding it. I mean, I wouldn't. That's not my sort of wheelhouse. I've been there, done that a couple of times. The one thing that we've noticed, and when I look at like how do customers, or when I was trying to predict, and we've tried to do this a number of times, of like what are the leading indicators that we can look at and qualify in our sales process before we bring on a customer? What are those leading indicators, or what are those things that they need to have in order to actually be a really successful customer with us? And just for context, for those just joining, we help companies build outbound sales teams, sales development reps. There's a period where you've got to build. There's a period where you're going to start to see pipeline building, and then there's a period where you're going to start closing. And what we find is that a lot of companies, they don't ever make it to that close, and there's a couple different reasons. And the biggest one that we found is like they didn't have product market fit. That was the number one in looking back, and we've probably done 300 customer interviews over the last 7 years, probably more, because that's just customer interviews. That's not like prospect interviews. The number one thing that we've noticed, and I wish I had silver bullets that I could just hand out or sell and say, oh, it's this one thing. If you have this one single document, if you write this one single email, everything's going to be good. It's not the case. It's product market fit. And in some ways, it feels like an excuse saying that, and in other ways, it's kind of humbling in that when we build a sales development team and they're successful and they're booking meetings and they're creating pipeline and closing deals, we're not actually that responsible for it. We're basically scaling up their product market fit, And so like they're the ones that got to product market fit. We're just helping them. We're building on the amazing product market fit that they've already built as a company, as an organization. We're just building that channel. And so it grounds us a little bit. It also helps us really understand that like it's sort of like that monopoly step. Do not pass go, do not collect $200 until you have product market fit. Because if I look at all of our, I shouldn't say all, but if I look at the bulk of the customers that have not done well and not hit targets, not hit benchmarks, you can go back and look, and I'd say it's very strongly correlated with either a lack of product market fit, weak product market fit, or inability to communicate very specifically what that product market fit is to a revenue team. And I think that's an equally important step as having it or not having it, is if you can't tell the people that are trying to build pipeline and process for you who to go after, they're not able to scale up that product market fit. So that's why I think it's the most, I shouldn't say, it's probably the most important piece to like all of sales and revenue generation, is like we sit on top of the product organization. And I'd say there's like product market fit, marketing, like product marketing, sales, and then customer success sits on the end. And that's the sort of full revenue stack. And I won't talk about the other things, but basically we know the sort of sales development piece.
Right. Yeah, no, good point. I mean, and I think product market fit, and if someone's looking for a single metric, I mean, it doesn't exist, because product market fit, that metric varies depending on, your ACV. Are you B2B? Are you B2C? Are you selling to SMBs? Are you selling to mid-market? Are you selling to enterprise? And product market fit differs, and that signal of product market fit differs depending on what you're selling, for you to give that go signal to start scaling. So there is the nuances of it for sure.
Totally. Yeah. And I mean, when we've looked at it, even breaking it down into like subsegments. So if you look at like your market, there's a bunch of different ways of describing this is who my ideal customer profile is. And when I say like building, I mean, basically there's a bunch of different ways of building that list. If you say I'm going after the enterprise, well, like, how do you define that? And there's enterprise, and then there's enterprise to markets, and there's all these different variables, and some of them are going to be significantly more important than others. But we've noticed that when you change one, sort of everything changes downstream.
Yeah, absolutely. So what you're talking about is, you have product market fit. So let's dive in a little bit further. So you have product market fit. Now what do we do?
Yeah, I mean, good question. This is the one that sort of depends on like what's your financial strategy, right? Like what can you afford? And so I think the next step is basically math. I think there's a couple ways of looking at it. If you break out if we break down the methodology, we sort of look at the guide or the formula to creating predictable revenue is consistent top of funnel, relentless follow through, and like table stakes. So there's all these things that you need to have, like a good website, et cetera, case studies, like referenceable customers that are kind of like, again, that monopoly step, do not pass go, do not collect $200. But the main two rhythms or elements of this is essentially consistent top of funnel and then relentless follow through. And before you jump into that consistent top of funnel piece, you need to plan and you need to do the math of what can I actually afford to invest profitably to acquire a customer. And I find I've talked to a lot of entrepreneurs that don't know that or don't have good data on that. And then they go out about embarking on an SDR team, which is a very quick way of spending $500,000 a year that doesn't generate any value for you. If you're not sure what you can afford, if you're not sure sort of what metrics you need to hit. So it's that sort of like funnel math that I'm sure you've done 100 times before. That's kind of step one.
Right. Yeah. Figuring out what your customer acquisition cost and how that's going to map into your lifetime value definitely, changes the game in terms of what your go-to-market strategy is for sure. Mm-hmm. That's a fair point. We, if your ACV's, $10,000 and you're trying to build an inside sales team, you might have some challenges down the road of ever turning a profit. So you need to understand that side of it as well. Yeah.
I mean, we had a customer back in the day and they were, I want to say a $1,200 ACV and they scaled up huge. And then they wrote a huge post about it saying like, it was a giant waste of money. And like, I totally agree. Like if you're even at like $10,000, it's going to be challenging. It's possible, but you have to be hyper efficient. And it also depends on the size of your market. If your market is massive, right? And so this is where like the profitability element comes in, right? Because I think what you need to, like the critical factors are size of market and value of a customer, right?
Right.
And then there's sort of like how reachable that market is through certain channels. Yeah, if you have to go door knocking, right, that's going to be a very, very different approach than if you're selling to like SMB and enterprise. But I think sort of zooming in there, those are the two, like the amount of revenue that they're worth to you on an annual basis and the size of the market are basically the two dials that are going to dictate what you can afford and what is intelligent or what is smart and going to be profitable to invest in terms of this customer acquisition channels and the style of say outbound. Like for example, on the lower end, you need to be hyper efficient, which means you're probably not adding much of a human element into the process. And so if we're talking specifically outbound, we're probably talking more about like a scaled personalization approach where you're personalizing to a very specific market segment. So you've got, you're getting very specific about your target ideal customer profile and very specific about the target persona. And you're building sort of my guess would be email-based campaigns of like 500 to 1,000, right? So you're getting very, very niche in your messaging. If you have, and that's so on the other end of the spectrum, if you only have 5 potential accounts that you could ever close that would be meaningful to you, well, then that's going to be a different story. And then if you look at when I factor in the value of your customer, if you have 5 accounts, but you're you can sell to 10,000 people within those 5 accounts. Okay, well, that's going to be a different strategy than if you can only sell to 100 people total within those, right? And on the 10,000, it's going to be, again, more of a scaled, probably, maybe a level up in terms of like adding some more of a human element into the process in the form of cold calling and maybe some social, and you're going kind of full on multi-touch. And then at the upper end of that scale where there's only a few, or even like as an example, one customer, that's like full account-based marketing probably done by the founder, right? And so as you go from one side to the other, you scale up from, very, very automated and no human resources invested in the process to, no automation whatsoever. And your founder CEO involved in the sales process. So that's kind of the spectrum that we've seen. And I think just figuring out where to place the lens in terms of like what's going to be profitable for us, what's going to scale, what's the right strategy for us right now, I think is the number one question you need to ask yourself. Once you have decided, hey, we have product market fit, then it's okay, well, what can we afford, and what's going to give us the sort of best what's going to give us the best pull out of the market? Are we optimizing for conversion, right, of like total market? We're just going to blank them, or are we optimizing for like just the number of touches?
Right. Yeah, absolutely. So helping figure out that kind of side of the things. You talk, and I love how you guys talk about this. You talk about like the revenue team or the revenue organization. That's like, what does that mean? What do you mean when you're talking about the revenue organization?
Yeah, I mean, I see it as sort of like interconnected between like the product and customer development team. There's like product customer development. This is what I call like the full revenue stack, because I see a lot of people like CROs, they talk about, being the CRO, and they'll have like sales and marketing, maybe customer success under them, which is accurate in that it is revenue, right? They're all revenue generating. But I think the missing piece is the product and product marketing. It's having all of those teams working in conjunction. So from sort of market, customer, product development, kind of building, I think my Zoom is reversed, but anyway, like building that initial product market fit, and then product marketing is that bridge from the product team into the marketing team that's describing, here's how we see the product market fit. These are the most important pieces, most important jobs to be done for the most important customer segments. They give that to marketing. Marketing builds the case studies, the materials that are going to enable you to look like a professional sales force. It doesn't have to be huge. Sales development kind of sits in between sales and marketing, sometimes rolls up under either, sometimes rolls up under as its own team. And they're that bridge that turns your marketing assets, whether they are inbound or people that show up to a conference, wink, or like a webinar like this, or whether it's just a cold list of like, hey, here's some target accounts, sales development of the people that go out and book those meetings, pass them to the sales team closes them, pass them to the customer success team. All of these things need to be working in conjunction working together as one unified team. And I think separating them out and not having them work together is one of the most challenging, is one of the areas where we see just tons of unnecessary friction, tons of balls dropped, and tons of potential revenue growth just lost.
Yeah, which I think it's easier said than done. So I think the guidance is, they always say that a revenue obsessed company thinks about it that way. And I think you often see cultures at some companies where, marketing is competing with sales versus working with sales, and they're not thinking strategically about how they can help each other. And some of that could be from even how their compensation plans are set up. They're incentivized to not work together. So there's bigger picture thinking when you're putting this all together to make it work, which makes a lot of sense for sure. Mm-hmm. But you got to think about it holistically and putting that together. So no, that's amazing. So you guys you help on that high level of really pointing out some of those pieces?
Yeah, I mean, when we get into on the consulting side, for sure. I mean, it's sort of like if you take your car to the mechanic and you're like, hey, the suspension is shot. And the mechanic's like, well, no, actually, you're just a bad driver. It's like, you didn't ask the mechanic for that. So it sometimes can be an awkward conversation. It's like, yeah, I can replace the suspension, but you're a person that's driving up and over curbs and you've got, you're in a small Honda Civic, like you shouldn't be doing these things. So there's some influence that you have. And I find if the customer's asking, right, then they're open to having that conversation. Because if you, it's like, do you want to fix sort of the symptoms or fix the cause? And there's a lot of times when misalignment between these teams is the cause and we're just fighting fires and dealing with the symptoms. So right. Yes, we will address that. We try and talk about it in the content in terms of how we see things fitting together. I also understand building a big company is a challenging process. Compensation is hard. And I don't think there's any I've been both on the marketing and the sales side of things and the product side of things. And I don't think there's any intentional sales hates marketing, marketing hates sales. It's just, like you said, misaligned incentives because people weren't intentional about the design. And so I think being that intentional and inviting in the people in your world that know about those things to make sure that they are aligned, I think is one of the most important things. There's another important thing. I guess I can't just show up and say all of these things are the most important pieces, but.
Do you guys, it's a trend I see often is under investing in customer success and, really focusing on new customer acquisition versus growing and farming your existing customers. Do you see that a lot?
I mean, yes, we're more involved in the front half of the equation. So yes, I see it through the lens of our customer and I see it through the lens of our customers, ourselves internally and our company and through our customers. But I'm probably not the person to ask about driving customer success. Not that I think we're doing a bad job. It's just, that's not my wheelhouse.
Gotcha.
But I totally agree, right? If your customers are only lasting 6 months, mathematically, it's going to be, there's a theoretical maximum where all of a sudden you just hit this, your sales targets basically grow exponentially up to infinity if you want to go from $5 or $10 million, from $5 to $10 million a year. There's a very steep slope of the number of customers because you're just churning them away so quickly. So obviously the goal needs to be pushing customer lifetime out. I think that really starts with no matter how good you are as a sales team or customer success team or marketing team, it all starts with really, really, really strong product market fit. And even the best customer success teams, I don't think they can have an influence, but they can't have they couldn't push that from 6 months to 3 years based on just a really strong customer success if your product if your product is garbage. You know what I mean?
Yeah, fair enough. So so let's jump back into the predictable revenue model. I mean, that's what VCs want to see. They want to see the unit economics. They want to see if I give you $2, you're going to turn it into $6. So what is the formula for predictable revenue? How do you guys deal with that?
Yeah, so I'll come back to the pardon me, the kind of three pieces, and it's consistent top of funnel, relentless follow through, and table stakes. And I'll talk a little bit about table stakes first. It's kind of the last piece of the formula. I think you could make the argument that it should be the first. This is where we put stuff in there. Like, I mean, if you wanted to throw product market fit in there, it'd be like its own. We sort of had that argument of like, oh, well, should it be out on its own thing or should it be in table stakes? But we ended up putting on its own because it's super important. So if we zoom in one layer deeper in the formula, it's those three things. If I look at what are the table stakes, what are the like, I can't use a Monopoly analogy again, but what are the things that you absolutely need to have before you start a sequence? It's a website that's good enough. And I'm not saying a great website, you don't need to spend thousands of dollars on a website, but you need to have something that accurately describes your product and the market you serve. And if you're looking at your site and you're going, oh, it's ugly, it doesn't matter if it's ugly. It just matters if the words that are on there are an accurate representation of the market that you're going after. So if you're pivoting and you're going into a new market, the website needs to reflect that. So that's the sort of website. You need to have case studies. You need to have, like, if I was talking to you and you're saying, hey, I want to build an outbound sales team. If you're a small company, I'd be pushing you for sort of like 3 to 5 minimum case studies. They don't have to be long, but you need to have some case studies go from the market that you're targeting, from the market that you're going after for a very similar use case. And also really helpful if they're not sort of related, sort of within the sort of VC family or PE family that you live in. Outside, unrelated, they're not your cousins, they're not your friends, family. I know that's hard for Boast because Lloyd is just like friends and family with everybody. So I think that'll be an impossible task at Boast, but 3 to 5 case studies. I think, right seats, right people, and then just enough cash to actually support and fund the model. One thing, and I won't rant about this for too long, but one thing I've seen a lot is people wanting to dip their toes into outbound. So I just want to try it out. I'm going to give it 3 months and see if it works. It's like, it's not going to work in 3 months. Just like if you invested for 3 months in SEO, you're not going to see a close customer from SEO. You'll see sort of top of the funnel, things starting to change. But you talk to any SEO or CRO or any of these people, and when I say CRO, I mean conversion rate optimization individual. And they're going to tell you it takes 12 to 18 months. And I think, from what I've seen, that's the same with outbound. And so really this table stakes piece, it's like, do you have the customers to support your claim that, hey, we're going after this market and it's going to be a good one for us? Is the website good enough? Does it explain what you do? So when people see your email and they click, and then, do you have the time to actually do it, to invest in that? So that's kind of the first leg. In some ways, the least important, because these are all sort of binary. Like if you have them, great. They're not going to add tons and tons of value. But if you don't have them, they will detract and sort of multiply the whole equation by 0.
Right. Yeah. No, that's fair. If your, average ramp up for a team or a BDR or an AE can be 3 to 6 months. So if you're not giving it 3 to 6 months to ramp up, how are they going to have a pipeline to close anything? It's never going to work. Right. So
exactly. Like you wouldn't hire a new account exec. Like if you don't close, $100,000 in your first 3 months, you're toast. It's like, what? I mean, I've taken those jobs and I've been unsuccessful at those jobs sometimes. And so, yeah, I think it's managing expectations is such a huge piece. If you come in and people are telling you, and there's some people in our industry that say, oh, well, you can ramp an SDR in 3 months, and they're going to be productive and you're going to get ROI in the first like 3 or 6 months. It's like, no, that's not accurate. It's going to take 3 months to get them like sending emails, making phone calls, sequences kind of worked out, like just sort of consistency in responses and meeting generation. So that's sort of, if we look at this on a quarterly basis, that's Q1. Q2 is there's consistent meeting generation happening, and some of those meetings are starting to turn into pipeline. Yep. Not saying that wouldn't happen in the first. And I'm thinking of this through the lens of somebody who's brand new to outbound. Obviously, if you have a ramped team, your numbers are going to be very different. But right. Q2 is where you're going to start to see those meetings turn into pipeline. Depending on your sales cycle, it could be Q3, Q4 before you start to see your first closed deal. And generally, we would advise people that outbound is going to be longer, right? Like the thing that we know about inbound is that people are coming to you. There's something wrong in their world. They're not wrong, but there's a delta between their sort of like expectations and their reality, right? That's why they're doing something about it. They see that delta generally. So they're reaching out to you. So there's motivation, but they're not necessarily qualified. They're not necessarily the right people. They have a problem. They're coming to you to see, is this something that I can solve using, Boast or predictable revenue or whatever it is. Yep. With outbound, that's flipped, right? You're pre-selecting who goes into that funnel. And so they're almost in some ways like pre-qualified for the credit card, pre-qualified to be a good customer, because you've taken your sort of all that information from your product team, your product marketing team, and you've used that to build a really strong account list of, if I'm able to book a meeting with these individuals, with sort of these companies and these individuals, they're, more likely to turn into pipeline. And the thing that all of them are going to be missing, or I shouldn't say all, but most of them are going to be missing, is motivation. You're reaching them out of the blue, and you can't just generate and manipulate your way into we're not sales Jedis. You can't just be like, Russ, you need to buy some SDRs, right? Like even if I could just like Jedi mind trick you, you turn around to Lloyd and you'd be like, hey, I need some SDRs. And he's like, no, you don't. Right? It's like, you're not just going to snap buy something. There's a whole committee, and there's it's got to be a business priority. And so the piece that I think a lot of people miss with outbound is that they take that lack of motivation as a lack of interest. And this is why the sort of relentless follow through piece is so important. Because if you think about it from a numbers perspective, let's just say, I don't know, I've heard a variety of different numbers thrown out about anybody that's in market, but just to keep the math simple, let's say that of your entire target market, 1 in 20 of the whole market are actually in a mode where they could potentially buy in the next X period of time. That means if I book 20 meetings, and let's say an average SDR books sort of 7 meetings a month. So over a 3-month period, and it could be lower, it could be higher. We have some clients that are like, hey, we want 1 a month, and that's enough. Like, they're huge meetings, massive deals. And I thought this was weird. They're like, no, more than 1 a month is too much. It's like, okay. And then we have some that are like, hey, if we get less than 30, we are upset. So right. It kind of depends, but let's just use 7. And let's say, you do 776 or 677. So you get 20 meetings. That's in 3 months. 1 of those 20 are going to be potentially in market in the near future. And there's going to be some people, and you're probably listening to this thinking, well, that's terrible. And yes, if you look at it in the 90-day lens, or through a 90-day lens, you're absolutely right. That's terrible. If you sort of widen your aperture a little bit and look at it through an 18-month lens, it's friggin' amazing, because you've reached 19 people that are potentially very good fits that haven't had a conversation with your customer or with any of your competitors yet. And to me as a salesperson, I love that. It's a lot more work, and you have to be very structured about your approach, but they haven't gone and read all your competitor stuff. They haven't been talking to they haven't been consuming your competitors' content. They haven't, formed affiliations or formed opinions. And maybe they have, maybe they haven't. But I grew up in sales. I still see myself as a salesperson. It was it's my trade, right? If everything explodes, I would go back into sales. Hopefully it doesn't, but you never know, I guess. I hope the company's not listening going, what? Things are going to explode. But I've always seen that as my fallback. But I think point being, these things take time, and you want to make sure that you're giving yourself the correct amount of time to let these deals turn into proper revenue.
Yeah. And I think you tied that back in with working together with marketing. What you're doing there is nurturing your top of funnel, that if you have a process to drip them the right information, they will naturally fall into your funnel over time. And that's where that alignment needs to be so key. Going in for that hard kill for the person trying to sell them, to fix the problem they don't even know they have, isn't going to work. Mm-hmm. So that top of funnel content or messaging changes dramatically.
And this is where so much value can be created by sales and marketing working really tightly together, right? If you're able to, if we zoom like super way too deep into the tactics for a second, imagine you've got some of your qualification criteria built into Salesforce or whatever CRM you use, right? And you can say, okay, well, they're under contract, the renewal date is this, and they're this type of customer. That's data that you couldn't buy from anybody, but your sales development team can learn that when they're qualifying. Now let's pretend that your sales development rep is awesome and they fill in those details in Salesforce. Well, now your marketing team can supercharge their content to this individual because they have so much more context into where is this person at? What type of content is more likely to convert this individual? How do we serve them better? And I think the way I think about it is every touch point with a customer or with a prospect is a conversation, whether it's over email, whether it's over like an email through a sales development rep, a phone call, a marketing email, and the whole company should be aware of the conversation that we've had, right? Anytime you add an additional individual into that conversation, there's this like loss of knowledge as you sort of step between teams. And if you could imagine a customer walking into your business, like let's pretend that you guys, that the internet doesn't exist and people have to buy from you by just walking in the front door. And imagine they talk to the person at the front desk, let's call them marketing, and they have a conversation like, hey, I'm interested in this. They're like, yeah, okay, go back, talk to Russ. They go back, talk to Russ, and the person at the front desk doesn't tell them anything from that half an hour conversation that they've had. Now they've got to have that conversation all over again. You're like, oh yeah, great. So you actually need to talk to our specialist in this area, and then you tell your specialist absolutely nothing. So now your customers walked in and had the same conversation 3 times, and they're exhausted. And so I think this is why it's so important for them to all sort of roll up together, is because if we come back to those 20 meetings that your SDR booked, 19 of them are being ignored by your competitors because they view it through the 90-day lens. And this is the pot of gold. This is the magic as an account exec. This is the stuff that I love, because it's now when I'm looking at, if I'm forecasting ahead and I'm saying, okay, I'm actually feeling like my pipeline is a little bit light, I need to do some hustling of my own, I can dig into these conversations. And if I've taken reasonable notes, I can go, okay, well, I usually have like a next step date and a next action sort of written out for myself. I just go and I follow up on those. And then I've got 19, every I guess quarter, I'm adding 20 conversations or 20 different accounts, 20 different contacts into my pipeline. That is just this little sort of nurture bucket that I know these people are good fits. I don't have to go and, go crazy on my LinkedIn or go digging around here. I'm just slowly, consistently, it's like compound interest into your pipeline. And it's not only you're adding it in, but you're also working it. And to me, as an account exec, that's just magic.
Right. Yeah. Managing all parts or segments of your stages of your funnel, right? Yeah. Mm-hmm. Putting the work in across it. Yeah, for sure. I love the relentless, follow through part. Man, I mean, you see stats all over the place. I think, they used to talk, it takes 15 touch points, 20 touch points. What do you guys, where do you guys kind of see it in the current environment?
I mean, I think I don't want to share an average, because I think the averages just, they're not meaningful. Everything is so dependent on the sequence that you're running, the customer type you're going into, the context of your product. There are some times when, if you say the average is like 8 touches, or I've heard 15 touches from some person, and I'm like, things have changed since then. If you send somebody 15 emails, they're going to murder you. And they rightfully should. And when I say murder you, I mean like murder your email and put it in the spam filter, which will then make it very hard to reach all of your other prospects. Like, we did some testing with our outbound lab stuff, and you can look it up on our YouTube channel. But I think it was 4 emails sort of max. And after 4, we were seeing a pretty strong drop off in terms of meetings booked or meetings coming out of that. Now, again, that's contextual to the clients that we were working with. And again, we absolutely had clients that were getting more from a longer touch, and we had absolutely had clients that were getting more on the first couple of touches. So it's so dependent on the market you're going into. But I think looking at I'm almost answering the wrong question, right? Because we're talking about nurturing. I don't see nurturing as just one opportunity, just one sequence of 4 messages and 6 calls and 3 social touches. Like, it's not how I see the world. I see a customer, like an account list and a prospect list, and then I'm going to work those lists and I'm going to put them into different sequences. And then when they make it through those different sequences, I'm going to let them rest for a while, and then I'm going to come back to them. And so I'm relentlessly focused. If I'm through the lens of an SDR, I'm relentlessly focused on growing and taking that customer list that I have and converting it into a meeting.
What you just described, like the process of that, and mapping it, like the buyer journey is, do you guys help mapping that buyer journey to figure out, when do they go to nurture? What should my nurture look like? When should I go in with harder messaging, or like just building that whole process out?
Yeah. And this is one of those things that I think the best advice I could give is just that I don't have silver bullets, right? I said at the beginning there, I wish I had a handful and be like, hey, listen, these are $1 million a piece. And if you buy one of these bullets, you're going to get $10 million in revenue. Like, I just don't have that. The best thing I could share is that you need to test for yourself. And so one, you need to test, and like testing everything and making sure that you're properly testing and you're only flipping out one sort of variable at a time. So that's the first piece. So it's probably testing. And then I think it's just being absolutely relentless without being super annoying. So when I say that, after somebody works through one of your sequences or cadences or whatever tool you use to organize your prospects, making sure that they don't just die and go off into la la land and like they're lost in your CRM forever. Making sure that there are specific rules for this is how a contact gets added in. This is how they progress from one sequence to the next. And even if it's from like, here's a call it onboarding or cold outreach sequence. And then once they move from that outreach sequence, they automatically get dropped into my long-term nurture, unless you move them into like a short-term nurture. And so just as a sales development manager, having those 3 different sequences set up that you can automatically push prospects into. And I'm not the sales ops guy here, so don't quote me on exactly how to do all this. I know this is sort of general high-level knowledge. I know our team does it in a much more complex way, but I think those are the 3 things that I would be looking at in terms of like, how do I turn a contact from cold, never heard from us before, into a meeting? How do I turn, and then, so that's one. And obviously the ideal outcome is we booked a meeting, but if we don't turn that person into a meeting, what happens next? And I would say automatically want to throw them onto a long-term nurture. And then I'd want to have the option for a manual nurture step, which is if during the course of that first sequence, you learn something interesting, like, hey, my hands are tied right now, but give me a call in Q2 or like on this day, because our contract renewal will be sort of line of sight on that. Then I'll put them into a custom nurture step. That's the generic high level based on averages. Everybody's going to be a little bit different. And I think the most important piece there is just to be testing.
Yeah. And having that nurture set up. Fantastic. I know we're hitting 10 to the top of the hour. I just want, for those who have joined us and have access to our chat, if you have any questions, feel free to pop some in there. Definitely want to answer some questions from the attendees of the webinar here. So so just feel free to pop them in the chat and we'll get to those. I had one story just on the relentlessness of like follow-up. It was just on how important it is to continue to kind of plug away at it. My previous role, I was a co-founder of a company, and I was tasked with the amazing privilege of buying benefits for the company, which was a super exciting thing to do, which was top of my list. Let me tell you, I really wanted to get it done. Mm-hmm. And a friend of mine I actually used to play hockey with, knew him fairly well. And I knew he was in the benefits business, and he dropped me an email, but I was just slammed, and I couldn't make it to the top of my list of like, doing. And then he called me, and I'm like, I know what he wants, and I want to talk to him, but I was in the middle of something, so I didn't answer it. And then he sent me an email like the next day, and I didn't get back to him because I was still busy. And I'm like, oh, I got to get to that guy. I got to talk to him.
Yeah.
And then he called me again, and I still didn't pick up the phone because I was swamped. 2 weeks later, I finally picked up the phone. I'm like, cool, you got to get in here tomorrow. I'm ready to buy it. And he's just like, what? And you think about that. It took him like 5 or 6 attempts to book that meeting. and he knows me, and I was a ready buyer. I was ready to pull the trigger right away. I'd already done research. I was already engaged, but that's how hard it was for him just to get it, because people are busy, they're doing other things, and if it's not top of mind. So that whole relentless approach, that nurture, making sure you're staying top of mind, it's just so valuable to that whole process, for sure.
Yeah. And I think we, in the sales department, we can make it harder on ourselves from time to time because we're looking at this through the like, hey, let's book a meeting, right? Like I bet you his voicemails and his emails and his texts were like, hey dude, let's chat. But the right step to serve you was not let's chat. It was, he needed to go up a level, which is like, hey, is this the right time? And I bet you $100, if he sent you a text that said, hey dude, is this the right time to chat about X? You would have gotten back to him that minute, been like, no, call me next week. And,
Right.
and it would have saved him 6 steps.
The right CTA. Yes. Good point.
And I find it's one of the things that we looked at hundreds of thousands of emails from our own side of things. And when we looked at sort of what that CTA was, going too deep into making too many assumptions in terms of that they have the pain and that they want a meeting is an absolute killer. So the people that just assume, like they write the email, like, here's what we do, like we're Boast AI, we do shred and US tax credits. Let's jump on the call. You're making the assumption that one, I can get those things, and that two, I'm interested. And I don't want to. The thing that my grandfather used to say is about assumptions is, I'm not going to say it, but you know what I'm thinking about.
Yeah.
And if they were just to, if you were to email me and say, hey man, we're in the tax credit game. Like, is that something that you guys are looking at this year? Or is that something you're thinking about this year? That's a much different conversation. That's a lot easier for me to say yes to. And you're going to get a lot more people. And as a salesperson, our goal here is to get people to respond, to open up conversations. And we understand the 1 in 20 rule. 1 in 20 are going to be ready for a conversation. And that means 19 of 20 are, like, if you look at prospects as the users of your email, if your email is a product, 95% of your users don't need what you're offering right now. Right. And so jumping in and saying, okay, well, let's book a meeting, you're going to piss off those other 19. And so if you soften it up and say, hey, is this relevant to you? Something along those lines, make yourself, one, you're going to bump your reply rates by a fairly decent margin. And two, you're just going to create better conversations. And those that aren't ready, you'll figure out when they are ready because they'll actually respond to you. So it's just one of those things to get so much more out of each of your sequences.
Absolutely. Yeah, no, that's very key. The right call to action at the right time in your sequence is very different, for sure. Yeah, no, that's a interesting point that I think everybody who's listening should take to heart there. I got another question for you. In terms of subject lines, do you optimize for opens, or do you have other strategies that you think about for your subject lines?
Yeah, I mean, the way I think about it is, and this is going to be taking also into consideration, I'm the CEO at this stage, so I'm not sending tons of follow-ups in sales cadences. But I can say the way I think about it as a sales, when I've been a salesperson, the subject line and the body of the email are sort of the 1-2 punch, right? And we follow the sales loft sort of guidelines in terms of shortness, in the subject line is better generally. And then I also look at it in terms of, like, how do I want this message to appear in my customer's inbox? I never want to trick them into opening my email, right? Those things that you do, you can get crazy open rates, but you've set them up with this false pretense. They're gonna get pissed off. So again, we're optimizing for 20 out of 20 people as opposed to like just getting 1 out of 20 to respond. So that's kind of how I think about it. Obviously, shorter is better. We've got some tactical things that we do in terms of like follow-ups that are like short, like one line, or sort of like one word in the subject line. But again, these are all things to test. There are, like, I could give you the last 10 subject lines that we've used that have been just like bonkers open, that have had bonkers open and reply rates. And you could copy paste those into your sequencer and they would be garbage for you. So
Yeah.
again, it comes down to testing. I think SalesLoft has some great data on the fact that shorter is almost always better unless you have a very personal contextual reason why you're reaching out. Like if I was reaching out to you, be like, hey, I know Lloyd, or like, hey, we've done a webinar together, you know, let's have that conversation. So if I have something like that, putting that in the subject line obviously overrides everything. If you don't know them, shorter is better. Subject, are you joining us? Is that what you sent out today, Lloyd, this morning?
There was one event we did where literally my subject was see you this Thursday, and I got 100% open rate. People get pissed off if there is no context, but that was an event where like Thursday there was an event and I knew most of the people. So
That's awesome. I think I might have got that one. We've done one where we got 100% response rate. We just sent them a meeting invite, like cold.
Wow,
It goes into their calendar. 100% response rate, people not happy with us at all. But when we did it, the funny thing is when we did it to prospects that were in sequence that we already had like some sort of a soft commitment on, it actually had a much better, it got a much better response.
It's annoying though, because now I'm on the other end of it, right? Like I haven't done sales in forever. We have a solid team. They're killing it. But after this fundraise, I'm getting hit by a lot of people. And one tactic, which is particularly frustrating to me on the other side of it, is if I hang up on a call, they'll call 3 or 4 times. And this has been happening a lot. And I think it's an emergency.
Yeah.
And I hate it.
Yeah, that's a tough one for sure. I throw everybody's stats off. I have this little issue where I open every email I get. Sometimes I open it, I'll read 2 or 3 words in the email. And if it doesn't appease me within 2 or 3 words, I close it and I don't look at it again.
Do you find that when you open it, just by looking at the structure, you can kind of tell? Like I don't even read the first signature or the first like opening line anymore. I kind of dip down to like, okay, what is the ask? I look for that. And then I look at their signature to see like, what's the context here? And then if that passes the smell test, then I'll like, if they personalized it a bit to me, or if it's just like our LinkedIn like name is predictable revenue, I think TM official page in like brackets. So if I see that anywhere, auto delete.
Hey, that's a good filter. Hey, I like that. Yeah. Sometimes I'll even go to the domain on the sender because I glance at it. It's not apparently clear who it's from. So I'll go to the domain and see if I understand what the company is. And I'm like, oh, it's this company. I don't need to read it.
Actually, that's a good point. I'll like, sometimes I don't even read their email. I just like see the subject line. I'm like, that's interesting. And I copy their domain out of their email address and I go to their website.
Which totally breaks sales in the methodology. So who knows how you optimize for that?
Totally. I mean, honestly, like we see that happening all the time at Predictable Revenue with our internal team. Our SDRs will reach out to people. They'll come on our website. They'll get not lost, but like forget that somebody sent them an email, and then they'll inbound to us. And I'll see like back when we used to sit in the office, I remember Sarah sitting there being like, I just emailed this person 2 days ago, and then they inbounded and they're talking to another SDR and like to our inbound guy, and our inbound guy's like, oh, so how'd you hear about us? And he's like, oh, I found your website. And Sarah's like, fucking email that person. Like, what are you talking about?
It's the SDR's worst nightmare when it's like all that effort is totally unrecognized.
Totally.
But again, you go back to a multi-touch attribution model and everybody is valuable across that revenue organization. So there you go.
True.
Absolutely. Well, we just hit top of the hour here. So that was awesome, Colin. That was a great session. We got it recorded. We got a few people joining us, but we will send out this recording to all those that couldn't make it live. We did do live on YouTube as well. So that's pretty awesome. Lloyd setting that up for us. Yeah, appreciate it. Thanks for joining and sharing today.
No problem. Thanks for having me on.
Absolutely. You know how to get a hold of them. You can go to Predictable Revenue and go to their website. Don't hit them directly because they want a web lead coming in. They don't want to give any credit to the webinar for any source. So
Absolutely.
Hey,
And if you got questions about the stuff we talked about, hit me up on LinkedIn. Colin with 2 L's, Stewart with an EW.
fantastic. That's awesome. That's another edition of our Traction webinars. Check out our Boast website. As I mentioned, our new product, we're doing quarterly advances of your tax credits. Get your money 12 months earlier. Invest it in your company if you've got product market fit, and you'll grow quicker. Thanks again. Thanks for another session, and we'll talk to you guys soon.
Thanks, Russ. Thanks, Lloyd. All right. Thanks, YouTube. I know you're looking at my screen now, and hope you're having a good one. Thanks for coming and hanging out, and we'll talk to you soon.